Today, we are diving into the national portion of the life insurance exam, focusing specifically on the critical concepts of concealment, misrepresentation, and fraud. These three concepts fall under the broad legal umbrella of the doctrine of utmost good faith, which means both the applicant and the insurer must be completely honest with each other. On your exam, you will likely see questions asking you to distinguish between these three. And the key often lies in the intent and the impact on the policy. Let us start with misrepresentation. A misrepresentation is simply a statement that is not true. If an applicant tells the insurance company they have never been hospitalized when they actually spent 2 nights in the hospital last year, they have made a misrepresentation. However, for the insurance company to void the policy, the misrepresentation must be material. This is a word you will see constantly on the test. Materiality means that if the insurance company had known the truth, they would have either charged a higher premium, offered a different type of policy, or declined the application altogether. If the lie was about something minor that would not change the risk, like the applicant middle name, or a childhood case of the chickenpox that has no long-term effects, it is generally not considered material and will not provide grounds for the insurer to void the contract. You must distinguish between innocent misrepresentation and intentional misrepresentation. An innocent misrepresentation occurs when the applicant provides false information but honestly believes it to be true. While this might still be grounds for a policy adjustment if it is material, it rarely carries the same weight as an intentional lie. Next is concealment. While misrepresentation is about saying something false, concealment is about failing to say something true. It is the intentional withholding of information that is crucial to the insurer's decision. For example, if the application asks if you have any pre-existing conditions and you leave out your chronic heart condition because you know it will make your rates go up, you are guilty of concealment. Exam questions will often try to trick you by describing a situation where an applicant forgot to mention a minor detail versus intentionally hiding a major one. Remember that concealment implies the applicant knew the information was important, but chose to stay silent to gain an advantage. Now we move to fraud. Fraud is the most severe of the three because it involves an intentional misrepresentation or concealment with the specific intent to deceive the insurance company for financial gain. While all fraud involves misrepresentation, not all misrepresentations are fraud. To prove fraud, the company must show that the person intended to cheat them. On the exam, look for keywords like intent to deceive or malicious intent. A common tract involves the contestability period. Usually, an insurance company only has 2 years to contest a policy for misrepresentation or concealment. This is known as the incontestability clause. However, in many states, if they can prove actual fraud, the policy can be voided even after the 2-year period has passed. You should pay close attention to how a question defines the time frame. To help you remember the difference, use the phrase, "keep it simple." Misrepresentation is what you say, concealment is what you hide, and fraud is the reason why you did it. A great mnemonic to keep these straight is the acronym NCF, which stands for misrepresentation is a lie, concealment is a secret, and fraud is a crime. If a breach of utmost good faith is material, the insurer has the right to rescind the contract, which means it is treated as if it never existed, and premiums are usually returned to the applicant. The exam will test your ability to determine if a specific piece of information is material. Always ask yourself if the insurance company would have changed their underwriting decision if they had known the fact in question. If the answer is yes, then the information is material, and the insurer likely has the right to deny the claim or void the coverage entirely. Be careful with trick wording that suggests a policy is automatically void. In reality, the insurer must typically take action to void it once the discrepancy is discovered. Understanding these distinctions is vital because the exam will present you with scenarios where you must decide if a policy remains in force or if a claim can be legally denied based on the applicant's level of honesty.